Healthcare issues on today's Fednobabble.
This is Fednobabble, where Kevin and Cassie make federal retirement benefits understandable for humans like you. These two don't hold back as they answer questions from the Fed Pilot workshops and webinars or from questions submitted by you at fednobabble.com.
All right. Hi, Cassie.
Hey, guys. All right, so today we're going to talk about healthcare issues in the questions that Kevin has gotten from his Fed Pilot workshops. Of course, as you know, we answer those questions, and he's gotten some really interesting ones.
First one is kind of easy. Does FEHB allow you to continue health benefits for a spouse after retirement? That's pretty easy.
Well,
What say you, Cassie?
It is and it isn't, because first the employee has to qualify for the health insurance, right?
Right.
And you know this, and you conduct these workshops, they've got to have 5 years in the FEHB program to qualify to continue FEHB in retirement. The employee does, not the spouse.
Right.
Okay.
So really, as long as the employee is eligible to keep it in retirement, which part of that is a big part of that is the 5-year rule. If the employee can keep it, the spouse can not only keep it, but if the spouse wasn't on in the first place, they can be added on later on in retirement as well.
Yes and no. So
What do you mean?
they can keep it for their spouse for when, if they include a survivor benefit option for them. So for FERS, you have to.
But that's only for death.
Huh?
That's only for death.
Yes, I understand. But if they want their spouse to continue the FEHB program, they have to also have a survivor benefit awarded to them to qualify for this benefit. So I know that people don't understand the correlation between the survivor benefit and the FEHB program,
Right.
but they have to qualify or have some sort of survivor benefit coming to them as a spouse in order to qualify to keep the FEHB in retirement.
So let's do a couple scenarios here.
Sure.
I'm a federal employee, and I have my wife on FEHB. I have the 5 years before I retire. I've been on FEHB 5 years before I retire, and now I retire. Can I keep my wife on?
Yes, you can keep your wife on, and as long as you elect a 25% benefit if you're a FERS employee, then she'll be able to continue FEHB even after you pass.
Okay, so I guess that's the next question. So my wife and I are on, and I die. Can she have it? And then your answer is yes, if you have the survivor benefit, at least 25% for FEHB, for FERS. Yeah.
CSRS, all they have to be entitled to is $1 a month.
$1. Yes.
$1 a month. You can elect the smallest benefit and keep 55% of $24. That gives your survivor $1 a month for a CSRS employee, and then your spouse can continue the FEHB or in the FEHB program. Now, here's the kicker, though. If your spouse is not listed on your FEHB enrollment and they're not covered under your insurance, and you retire and then pass away, your spouse does not then get to enroll in the FEHB program and continue it. Even if there is a survivor benefit awarded to them, they have to be on the program at the time that you pass. So I guess the kicker is you have to know when you're going to pass away to make sure that your spouse can be on your FEHB program.
That would make this whole thing. That would make this whole thing so much easier. If we knew that when we can pass, or when we are going to pass, or maybe our spouses know when we're going to pass already. Maybe they have a date for us set out. You're going to pass on this day. Maybe they know and we don't. But you're right. If we knew when we were going to pass away, then that would make this whole thing so much easier. Because really, with a survivor benefit, I could pay into this program. But if my wife dies first, well, well, then I've thrown all that money away. It's all gone. And so really it's a 50-50 crapshoot of who's going to die first? I don't know. So we're going to pay for this just in case. And that becomes an issue.
Yeah. To get your money's worth out of the survivor benefit, you got to make sure that your spouse doesn't pass away first, huh?
Right. No, let me do it first. No, let me. It's a Romeo and Juliet thing. No, I'm going to. No. I don't know. Okay. So there's that question. Here's the next question. Thinking about retiring in 2 to 3 years. My kids are 23 and 19. How will that impact their, I'm reading this backwards, health insurance there?
Yeah.
How is that going to help their impact their health and their kids' health insurance?
Well, the FEHB rule states that kids or dependents who are unmarried can be on your program until the age of 26.
Right.
If they are, unless, of course, they are incapable of self-support. And that's when you would need to go through the process to either get your agency or your healthcare provider to get the letter needed to ensure that your health benefits are going to be able to continue for your children after the age of 26. If you guys have questions about that, please reach out to us and we'll get you hooked up with that process and what you'll need to do to make that happen.
So here's a kicker. I've been asked this question very few times, but I know it's happened more than some people would like to think. So let's say my wife and I got started late with kids. I retire. I'm 60. Let's say I retire my MRA. Let's say 57 years old. And like this, I have 2 kids that are 23 and 19. And then I decide not to do survivor benefits. And then I die at 60. So one of my kids is not on our insurance anymore. The 23-year-old became 26. But the 19-year-old would still be on my health insurance, let's say if they're not married. But I die I don't do survivor benefits. Then what happens? So I know my wife is kicked off of health insurance. Is my child as well?
Yeah.
I hear this actually a lot with law enforcement who are retiring at 52 years old and they have young kids and they want to keep them on the health insurance just in case for those, for 10 years or more. And wait, are you telling me that if I die, my kids will be kicked off as well, along with my spouse? Yep, they're going to be kicked off as well. It's a family package there.
That's right. Because you can't have a self plus one or self plus family option without the self qualifying.
Right.
Right. And so the self is either you, the employee, or your spouse. Right. And then the family and the plus one or whoever is the child or children that you need to have covered. So you can't elect a family only option. That's not really
right. Family minus option. Me option. Right.
Yeah, that doesn't really work out. And so you've got to have a primary enrollee in order for the dependents to be covered under the health insurance program. So you can't just leave your kids aren't going to be covered unless your spouse or you are covered as well. So
right. So really
you have to unfortunately leave some sort of survivor benefit to your spouse in order for them to be able to continue in FEHB and of course have them enrolled in the program.
Yes. Yeah.
So they can continue that if you pass away early.
So really what this is in answering this question, just straight plain vanilla, nothing extra special. How does this affect my kids if I were to retire with health insurance? As long as they're on your health insurance, they can continue to have it until they're 26 or unmarried. Right. So it's really easy that way. But as you pointed out, and as I have pointed out, it's really easy to answer these if all things are equal, if nothing ever changes. And how many times in life does that, things always change. There are always exceptions. There are always, oh, well, you know what? This happened now. And what happens? Well, that completely changes everything. You just can't go off the same rule because it doesn't hold fast and true to every single situation. So,
and with the government, they're always coming out with different rules and new things because there's so many different bills on the House floor on changes that are being made to the benefits and everything else. Point. It's just a matter of when do they get passed. And then what does that look like once they're passed, right? So,
so there's a plug for watching.
For now.
What was that?
I said that's the rule for now.
Yeah. So there's a plug for watching what Congress does because they change things every now and then, and that isn't often disseminated, and the rule changes. I had someone recently catch this, Cassie, this week in one of my workshops. Ask. I heard that you take your however old you are plus your years, and if it equals 80, you're eligible to retire.
Interesting.
I have heard that.
I have never heard that rule.
Seriously, I have heard that over and over and over again. And not that it's frequent, but through the years, I've heard this a number of times. I'm like, no, that might be an old rule or something, but that's not anything close to what it is now.
I've never heard of that rule. That's very interesting. I do know some state and local governments can have some, funky kind of rules where maybe they're misunderstanding that and blending it with the federal system because they've heard it similar.
Now, isn't that interesting that you could confuse if your spouse works for the state? Now you're starting to confuse different programs and their rules and
Well, you think about it, what if somebody came from a state or local position before their federal employment and they just might be confused on something?
Right.
That might be a situation too. And so that's definitely not what happens with federal government. You have to have a certain age and certain numbers of years within the federal government in order to qualify for a pension from them. I've recently been getting people who are older coming through and getting an analysis done. And the thing to look for then, because a lot of them have also had like military service and things like that, we have to make sure that they actually get the 5 years vested in the first program or CSRS program. So just know that whatever federal government retirement system you're under, whether it's CSRS or FERS, you have to have 5 years vested in order to qualify for a pension. And I actually had a situation that I was helping a employee with. We were going through their retirement application, and her husband actually had federal service time, but he did a deferred retirement, which means he left before he was the age eligible part, right? And went private sector. And so now we were doing her retirement application, but then we also did his as well because he qualified for his pension because he had 5 years vested in the system. Of course, he doesn't have HR or anything else. So we were, just did the document online and sent it directly to OPM. But, so anybody who's had 5 years in the system will qualify for a pension at age 62 unreduced. Mm-hmm. I know that we got kind of off on that.
No, that's okay. Just extra nuggets, though. That's really good. Actually, you started making me think of another episode we need to do, and maybe we'll do that next, but I'll tell you about that later. Okay, last question here about health benefits, and I got to bring this down. I heard that using sick time or FMLA will or can count against me. What if I work 20 years and I've used 1 year of sick time? Can I only claim 19 years? Is that true? So I guess the first question is eligibility or calculation. What are you talking there?
let's talk FMLA real quick. That's Family Medical Leave Act. So if you're a federal employee, you have this available to you, and you can essentially, it allows you to use that time for medical purposes, those sick leave and annual leave, accumulation that you've got in your bank there. But that time, it's all paid for. That's time that you've accumulated. That is time that you have worked for. So if you use your FMLA, it's going to count as regular service time.
Yeah.
Number one. Let's just talk about, what does that time count for? So the next thing is, you said eligibility, right?
Right. Does it still count? So for example, if I'm going to be if I can retire fully at 60 with 20 years, but I take a year off, does that bump me down to, you only have 19 years of working? Because I didn't work that last year, right? It was a full year of sick leave. Does that still count?
It still counts.
Yeah.
That's the thing is, the only time that's not going to count in the computation for your service for retirement purposes is, if you weren't working in a full-time position, then you're not going to have that full-time computation, right? If it's non-deduction service, or if they're not taking contributions from your paycheck, then, you're not going to have that time credited to your service. Or if you're in a non-pay status, more than 6 months.
That's what I was going to go to next. Exactly. Mm-hmm. Yeah, explain that.
And so if somebody takes leave without pay, or they're furloughed or something like that for longer than 6 months in a calendar year, then the time from after the 6 months, say I took 8 months off in 2022, right? I don't get paid. I'm in a non-pay status for 8 months. Then I only get those 2 months don't count. The other 6 months still count because they're within the same calendar year. Now, if I took 8 months, but my 8 months started October of 2021, and then I start going back to work in May of 2022, all that time counts for retirement purposes. Even though I wasn't getting paid, deductions weren't happening because it was shorter than a 6 month time period in the calendar year, then I still get that time counted. As far as sick leave, you're still getting paid. You're still making contributions. All of that time will count. My husband had to take off 3 months of sick leave because he had a motorcycle accident and was bedridden for breaking his back. You bet that time counts in his computation date. They did not adjust anything to remove that from his retirement service, even though he was on FMLA. Using his sick leave. So again, you've accumulated that leave, even if, maybe you didn't accumulate all of that leave and you got it transferred to you from somebody else, and it's, given to you or whatever, you can still use that leave and get credit for retirement purposes. Even if you don't have leave and you still take the time off in a non-paid status, you'll still get credit as long as it's less than 6 months in a calendar year.
So here's a little tip for everyone. If you think you're going to have to take off leave of absence for more than 6 months, if that's anticipated because of whatever life situation throws at you, if you can time it, do it in the later half, in the second half of the year. Start it in the second half of the year. That way, you'll have 6 months or less in that first year, and then you can have up to 6 months in the second year, and none of it will be counted against you. It's one of those little tips and tricks that almost no one knows about, that you can take advantage of. That, if you did it wrong, that's a whole year that you get off of your date. But if you do it right, it won't count against you. So, let's figure out how to do it right. Again, those little rules can make all the difference in the world if you play it right. But people who are trying to figure out retirement a couple years before they retire, they're going to miss out on all of those types of rules, because typically those are rules that you could have used over the last 30 years of working. You can use those anytime during that time, and it's not going to hurt you. But now you go, oh, I wish I had known that. I could have retired a year earlier. Yeah, you could have, but.
Or, hey, I could have timed that surgery differently to where now I didn't lose 6 months or more because I would have, picked a date different or something like that. And so, that's definitely something to take a look at. And again, if you have something where, okay, it's I can use FMLA and get credit for my leave and use my leave for that medical time and then go into a non-pay status towards the end of the year and then have that ability to go into the next year. And as long as it doesn't go past, June into that next year or, obviously the end of June, then you'll, as long as it doesn't go past that, then you'll still get credit for all of that time. So, if you have something going on where you have to have a medical thing and you're going to have to use FMLA, make sure that you're coordinating that right. If you don't know what that looks like and you've got questions about a financial position that you're going to be in and what to plan for, of course, our financial advisors or trusted in our trusted network can definitely help you answer that question. So feel free to reach out to us. Like, subscribe, comment, whatever. Shoot us an email. Go to Fednobabble.com, check us out, and we'll be able to try and get you that information. Or I'm sorry, we will be able to get you that information.
We'll just try. No, we will. And that's the great thing. When someone comes to us with a question like that, it's like, and we've never heard of that, because honestly, there are situations that still come up where we're like, wow, that's a combination I've never quite heard before. Let's make sure of this, and we'll go and we'll find it. Now, those are rare because we've been doing this for so long, and we've looked at thousands and thousands and thousands of federal employees and their situations and their applications for retirement or whatever it may be. It's rare, but we'll figure it out. And so if you have a question, don't think that you can't get an answer, because you can. Just give us contact us and we'll make sure you get that answered for you. All right.
That's right.
Thanks, everyone. Until next time, take care. Well,
to get Cassie's comprehensive report on your federal retirement benefits at no cost, no obligation, and no sales pitch, go to Fednobabble.com. While you're there, submit a question for them to answer on the show.